Hi everyone, and welcome to today's Freight Break webinar. My name is Aditi Mehta and I'm the Product Marketing Manager for Cargo and Travel at Pros. I'll be your host today and I'm excited to discuss the maritime industry and how they can fight back to profitability. Today's special guest is Mark Crossley, and he'll be talking a lot more about the industry and what trends he's seeing. I'll kick off the conversation very soon, but first I'd like to go over a few housekeeping tips. All lines have been muted to reduce interruptions and delays. We'll have a Q&A session at the end to answer any questions that you may have. At any time, you could type in questions on the Questions tab of your GoToWebinar control panel. With that, let's get started. So hi, Mark. Welcome to the Freight Break webinar. We're really excited to have you today. Could you talk to us a little bit about who you are, your background in the maritime industry, and the role that you currently have at Pros?
Sure. Hi there. I've been part of the maritime sector for as long as I can remember. In fact, my father started as an agent in Alexandria in Egypt. He then came to London as a dry cargo broker, ending up as managing director of Lambert Brothers, then the largest broking house in the world. Personally, I joined John I. Jacobs, a London broker, as a tanker chartering broker in the late 1980s. I was then recruited by Gulf Shipping into their in-house commercial team, where I basically travelled around looking after issues faced by their extensive and quite diverse fleet wherever needed. So really an in-house troubleshooter. Then I joined the in-house sale and purchase function within Gulf Shipping. I then moved back into tanker chartering in the chemical and gas side, and finally went to Egger Forrester S&P broking, specialising in tankers. Then I took a break from the shipping sector, went into IT, which was flying high at the time. And worked in sales in IT, mainly on the storage and network security sectors for companies such as Internet Security Systems, IBM, looking after large enterprise accounts, before coming full circle back into the maritime sector, where I've been specialising in providing maritime ERP systems to owners, operators and managers, both on the commercial and technical side of the industry, as well as providing a specialist software development for the maritime sector. At Pros, I'm looking after the development of the company's maritime offerings. Pros has been trading successfully for over 30 years and has a proven track record of driving top and bottom line profits in the cargo and logistics industries. And after years of viewing technology with a degree of skepticism, the maritime sector is looking to embrace its advantages, and so as the leader in the field, Pros is looking to provide the sector with pricing science and expertise.
Great. Well, thank you. We're happy to have you here. So let's dive right in. Today we're talking about the changes in the maritime and shipping industry, and the past few years in maritime have been difficult due to weak economic activity and slack trade. Mark, could you give talk a little bit about that, and what are some of the issues the industry is seeing?
If we break it a little bit down into the sectors, because you do really have three distinct sectors in wet, dry and the liner side. In tankers, we saw financial problems, and we've seen financial problems across the board. So there have been consolidations, and some of those have been successes, some of those have been failures. We also have the ongoing issue of OPEC, and in particular the Saudis, and how they consider production in the wake of oversupply. And there's also nervousness around the USA's domestic production of Prax produce. But one sector that has seen a vast upturn is the LNG markets. This supposedly, well, hardly new anymore, but being considered what used to be almost a waste product is now the new super fuel, taking the world by storm. And you've even got new builds being powered by LNG. So the people who are shipping it are people who are benefiting from it as well. The dry bulk sector has taken its fair share of hits, with the oil markets even toying with circumnavigating brokers to fix cargoes using online trading systems. There have also been a couple of high-profile disasters at sea, where very large oil carriers have been converted from very large oil carriers have failed and sank with a loss of life. So that is something that's particularly worrying for that sector, and it's having to keep its own house in order. The liner sector has also seen some major shake-ups. Obviously, one of the biggest news stories of the year, Panjin collapsing, not just in the liner sector there, but across the board really, with backers just walking away from the ailing giant. Consolidation and alliances have been happening. Rates as a whole were flat or decreasing, and an increasingly volatile market. So really the market as a whole saw excess capacity, which hurt rates across the board. One answer was seen to be build super carriers, so reduce costs of emissions, therefore increase any margins on the cargoes held. But with an increasingly complex sales cycle, it looks like it is maybe time to call in technology to provide a fix. It's, obviously the maritime sector is traditionally conservative, and old school methods have been for so long good enough. There now is a realization that the need to deliver efficiencies into both commercial and technical practices is being driven by investors and compliance issues. Whiteboards and spreadsheets are being replaced by automated systems that keep track of everything, from spot or charter party fixes through to the operational delivery of the freight and against charter parties, and invoicing while making sure that owners, operators and managers remain compliant and in line with regulations from increasingly powerful group of bodies, including IMO, SOLAS, flags, country regulations, and not forgetting internal HSQE adherences. Box carriers are also facing local production and sourcing of goods, and new big players in the logistics game challenging the status quo. Amazon is but one. But in this sector, there is an added twist with extremely complex pricing and quoting cycles over different routes that have been relying on gut feel and experience to deliver pricing, which has led to uneven numbers being delivered to customers, which in turn means that owners cannot keep control of their top line or remain agile in a fast-moving environment. So, sum up a long answer to a short question. Overall, there's been a lot of status quo in the maritime sector, with the sector saying it will revolutionise the way it operates, but until recently, not everybody has been thinking the same way or acting on that.
Yeah, that's very true, and we're going to talk a little bit more about some of the things that you mentioned, like pricing and quoting and how to streamline that.
Sure.
One of the things that you mentioned and some of the things that we've been hearing about in the news is just general consolidation going on in the industry. Is consolidation something that is going to help in the case of overcapacity?
That's a good question. Too early to tell, really. Fear, uncertainty and doubt in any market tends to fuel more uncertainty. A lot cleverer people than I've tried and missed the mark. And if you could actually hang your hat on it saying that consolidation would definitely cure everything, then there'd be a lot of investors rushing in to back that, and we'd all be rich. There are too many variables is the simple answer. It's consolidation delivers larger corporations, but they still have to fill those holes. They still have to fill those tanks, and they still have to fill those slots with ever more freight. And where does that come from? So I think that is more the issue facing is there needs to be increased demand for that capacity and overcapacity at the moment. And where's that going to come from? That's the question that really needs to be answered. The liner industry has also gone down the alliance route with 3 big players now operational from April of this year. Again, too early to call, but there are concerns that these huge alliances are creating cartels, putting pressure on bunker providers, on port operators, etc., and having to be actually fed. We have the feeder companies because some of these big beasts can't get into traditional sized terminals. Some of these vessels are 20,000 containers plus, too big for some of the existing terminals. So you're seeing the new terminals as well, terminals like London Gateway springing up with the capacity to take these vessels. But the cartel concern is real, as witnessed when the Department of Justice raided a private box club meeting in New York a couple of months ago, which was being hosted by US owners, was attended by some of the biggest names in the liner industry.
That's really interesting. So it sounds like even regardless with this current situation, it seems like there's not a lot of money flowing into the industry from investors. Why is investment so important to this industry, and how can shipping companies attract money or investors?
Investment is vital in any industry, and shipping is no different. So yeah, the industry looks for investors and then looks to deliver those investors a return. Again, no different from any other sector. And these investors, they have hugely diverse portfolio of potential opportunities to consider. The question really should be, why would they go for the maritime sector as an investment? Why would it be able to deliver them a return? There's obviously a huge potential to make money in the maritime sector. There always has been. And there are always people who will make a lot of money out of it. But the investors, the institutional investors, they're highly sophisticated organizations who rely on science and technology to deliver financial vehicles to the marketplace. So why would they necessarily consider investing in a sector that doesn't use the same science and methodologies that they use to improve and maintain their business processes? There has been a fundamental shift in the way that people shop and do business. This includes B2B as well as B2C. In the old days, the owners and charterers were in control of the whole process, with usually brokers in the middle being fixed either side. And those brokers and the owners or the charterers or whoever relied on smoke and mirrors with gut feel and last paid playing a large part in the process. That is no longer the truth. This has changed fundamentally, as I said. Certainly in the container markets with NVOCs, non-vessel owning common carriers, and merchants themselves, the end charterers, being able to negotiate passage directly with the owners and operators. Intermodal options have to be considered along with a host of other variables, which makes the whole pricing operation a veritable minefield. But something has to be done to increase the efficiencies of these operations, to streamline process, to increase productivity, and to increase efficiencies. Speed up delivery of pricing, because it's been widely proven that the first price on the table is often the price that gets taken up, which will help with the quoting side of it. And ultimately, what everybody's looking to do is to drive up revenue and drive up profit.
Right, that makes a lot of sense. So it's clear that the cargo industry needs to revamp the way it sells its services and improve customer relationships. So we talk a lot about this at Pros in the context of B2B relationships. What can the shipping industry do to improve customer relationships and in turn increase sales?
Well, the business-to-business buyer has changed a lot. Sometimes we forget how similar the business-to-business customer is to the business-to customer site. I mean, it's something we deal with a lot at Pros. Now, business-to-business shoppers expect the same experience that they get as a consumer in their home lives. They want the same experience that they get when they shop on Amazon or on eBay or with any other retailer nowadays. If you don't have this modern commerce approach to it as a retailer, you're going to suffer. They want improved tech or IT experiences at home, and why wouldn't they want this in their job as well? So this has not only become a necessity to generate business with your customers in a business sector, your customers experiencing smooth, frictionless transactions, but it's also actually a way to retain staff. The staff, they want to be successful at work, and if they are able to generate quotes quickly, seamlessly, and across devices, deliver those quotes and prices to their potential customers, who will, if they get there first, more than likely book with them. Why wouldn't they want to work for a company that can provide that, rather than a company that is holding them back by relying on old technology and the old way of doing things? This means that the sales process has to be, as far as the user interface is concerned, simpler. And maritime companies need to invest in technology to enable better experience. Unfortunately, the industry has been notoriously slow on the updated technology. That's not just now, that's going back years and years. It has been notoriously slow because, and quite rightly so, if a ship breaks down or something goes wrong in the middle of the sea, who's going to fix it? But the technology is getting to the stage now, as we'll come on to in a minute, where you don't really get the failures that you used to. So now is the time for maritime sector to look at technology as a saviour.
That's a really good point. You mentioned also just that investing in this technology and changing the way you do things is good, not only for your customers, but also if you need to recruit a new workforce, a younger millennial workforce isn't going to want to work for you if you don't have the right technology. So that's a really good point. At Pros, we also talk about this concept of modern commerce in the context of sales and pricing, which you kind of hinted at earlier. What does that mean for maritime, and how can it help the industry?
In the first instance, modern commerce is really about changing the way you do business, to shape and adapt all parts of your institution to be smarter, more efficient, and more technically reliant. As I mentioned before, business buyers want the same experience that they do when they're outside of the business context. If you look back not so long ago, your best technical experience was probably at work, where you got given a mobile phone, a PC or a laptop or whatever, and that was as good as it get, because it was too expensive to have it at home. But with the emergence of smartphones and all of the services and apps that go with that, you've seen the advent of people and companies encouraging bring your own device into work, and they will program it so you can receive everything that you would do work-wise, either sandbox or part of the network on your mobile solutions. They really do need these machines, their personal devices, to work on their company's network. So in order to be really successful, companies have to make that happen. They have to make their networks adaptive. So to be really successful, to gain market share, you have to change your business processes internally and externally, and tying them into how people expect to do business nowadays. Now, the maritime industry has the added problem of dealing with their outlying offices. As I mentioned before, their outlying offices being their vessels. What happens if something goes wrong at sea? Modern commerce helps in that all solutions are in the cloud. So there's less and less reason for fear of technology. The cloud is always kept up to date with solutions delivered by up and down links, and a lot of the landside solutions are able to be delivered seamlessly as part of CRM and ERP deployments.
That's interesting. So what are some examples of modern commerce in the shipping industry?
I would say in its very formative stages at the moment. Introduction of online freight platforms, online quoting, shipment tracking, are all great examples of that. But again, they're just happening, and really, the early adopters in this area are going to really steal an unfair advantage on their rivals. And the crux of modern commerce is creating systems or processes that make selling and pricing process transparent, so you can easily see what you're getting and for what price. And you know, it's so easy to compare pricing now, so it's how you get that pricing delivered to you. Is it easy to understand it? Is it easy to action on? Omnichannel, so that you have the same experience whether you're ordering online by an agent or through a second or third party. Dynamic, personalised. You want the process to understand who you are as a customer and provide personalised offers. You get it at home. Why shouldn't you look to get that as a preferred customer, as a business worker? And the offers should be dynamic, so they should be able to anticipate changes in the marketplace. It's one thing that is the market is very, very poor at doing at the moment. At the end of the day, the maritime industry, in order to do any or all of the above, has to stop using the old tried and tested spreadsheets and really embrace customer relationship management and improve quoting and pricing processes.
Yeah, that's a really good lead into my next question. You mentioned that businesses need to be transparent and dynamic, and pricing and quoting is very much related to that. Why is dynamic pricing science a key to that process?
That's a good question. I would say a major source of friction in today's buying process, certainly in the box shipping side of it, is internally focused approval cycles. And I'll elaborate a bit on that. In many instances, a business comes to your company for a quote on some shipments. And for the majority of those line of companies, this requires an extensive approval process, especially if you're being squeezed on the rate, and it then has to go, it goes below your authorized floor, and it has to go off for myriad approval processes. Now, these are largely centered on financials, with pricing as the key factor. While the intention is to ensure the company maximizes its revenue opportunities, that comes at the cost of time. And as we've mentioned before, if you're slow on pricing, you can lose the opportunity completely. This usually doesn't work. This slow process, this approval cycle, usually doesn't work in a modern commerce world. Buyers want pricing now or as quickly as possible. And they will just go to a competitor if you can't price quickly enough, or if they aren't going to a competitor already to compare pricing. The pricing teams are left shooting in the dark, trying to come up with a quote quickly, and that may not be the best for the business or the customer. You're not taking into account any transactions in the past from this customer. Basically, what do you think they'd be willing to pay? Rather than basing that on a gut, you're basing it, with modern commerce, you're basing it on scientific analysis of data. So the dynamic price science ensures prices are timely as well as consistent across all channels for your customers. Dynamic pricing delivers what modern commerce requires: speedy, financially sound deals that are consistent across those channels. And it makes sure that your sales force is uniform when they're quoting, not forgetting also discounts that have been agreed with that customer. So it also cuts out mistakes and makes sure that those initial pricing is not only quick, it's financially sound, but it's accurate.
Right. In knowing Pros and what they do, I know Pros has some cargo customers that are already adopting this modern commerce practice into their business, as well as dynamic pricing. Could you provide an example?
Absolutely. Pros has some great example customers in the cargo side. Sometimes Maritime isn't always a first adopter, as we well know, but if it's proven to be successful in similar verticals, then why wouldn't the maritime industry use it? And the big unique that maritime sector has is that it ships the cargoes that it has on water, by sea. That's really the biggest unique that it has. Everything else and all the other issues that it has are faced by other verticals. And we have one in the Hub Group, who are a major trucking company based in North America. Their biggest issue was that their pricing team generated prices manually, something that we see in the shipping sector. So the prices became stale very quickly. Because of this, they experienced a high churn rate, as we said, frustrated staff leaving, decreasing win rates because they were slow in delivering the quotes. Other companies got the deals. And overall less understanding of willingness to pay for their customers. They became so big that it became unwieldy to do all of this pricing manually. So they employed Pros to provide pricing guidance and optimization, so they get a better understanding of floor, target, and expert pricing based on customer data. It was dynamic pricing based on science, and it resulted in a 1% increase in margin improvement. Targeted pricing that reflected the customer, and it was personalized and resulted in less churn.
Well, that's a really impactful end result for this company by employing Pros. So definitely see the impact from dynamic pricing. So thank you, Mark, so much for joining this Freight Break webinar. That was a lot of great information, which I'm sure folks in the maritime industry found very interesting. We'd love to continue the conversation. So I'm going to open up the floor for any questions there might be. I'm just going to give it about a minute to see if any questions come in.
Sure.
Okay, Mark, we did get a question in. Right now we're changing pricing once a quarter, and it's a very complicated process because there are so many stakeholders. But we want to be more agile and change prices almost daily. Is that possible?
Absolutely. As if I refer back to the study we had with the Hub Group, one of the points that they came to us with is that their pricing was becoming very stale very quickly. They wanted to be able to set their prices a lot quicker than they were able to do, but same problem as a questioner here. Because the process itself is so complex, and because that in itself becomes painful. It becomes a big pain point within the company. Trying to get all that information together, trying to get it all accurate and make sure that it's timely, and then go through the process of analysing it and coming up with rates manually, and then getting all of those rates signed off, because ultimately it's a business decision that has to be. All of that, doing it without science, is very, very problematic indeed. Using Pro's data science, it's very quickly, and it's an ongoing process, because all of that information that's being fed into the system is up to date, and it can show you using segmentation, using price waterfalls, and all the sorts of science that we can bring into this decision-making process. It becomes an automated process where you very quickly have the prices you need, and you can update them instantaneously. So all of your sales reps have their floor, target, and Excel splits, and it can be delivered seamlessly to the sales force. So absolutely, answer the question, yes.
Okay, that's great. And I think what you just mentioned relates to the next question is how does pricing guidance work in terms of approvals and making sure that whatever the sales rep is quoting is within policy?
It negates the need for so much approval raising. Obviously, if you have somebody who is at over your target rate, you don't necessarily want to bring them down to the target rate. You keep them up because their willingness to pay is up there. But you've got people who are performing, customers who are performing below your target rate. You need to bring them up, and so the approval process is really in place to make sure that you're aiming for your target as much as possible, and if it goes below that, the approval process is automatic, in that it'll either be a yes, go ahead with it, or it'll be a no, and that takes into account the customer data, what's being done in the marketplace, potentially, and all the other data that's flowing into the system. So it becomes an automated process, and it does mean that your sales reps are not waiting around for approval. It's a red or a green light. Does that answer the question?
Yeah, that's great. Thank you, Mark. So I'm looking at the time, and it seems like we're out of time today for questions. So I appreciate everyone's attendance and participation, especially you, Mark. Thank you so much for the information that you shared today. This session has been recorded, and we'll be sending it out via email, and it'll also be on pros.com for future viewing. So again, thank you, everyone, and we will talk to you soon.